All right. Good evening, everybody. Late night crypto talk here. So who do we have? We've got Calvin Iserman, Mathus, Loretta, Wisdom Capricorn, Shauna Ross, Gerald Gardner, Jeremy Keene, Stan Williams. Thank you for the comment. I appreciate it. Lee Dickey. I am sitting here watching breaking news about some suspect barricaded himself in a Trader Joe's out here in LA. Even the president's tweeting about it, so let's see how this comes to a conclusion. Saturday afternoon. You guys enjoying your weekend so far? Now, as a disclaimer, I am not a licensed financial advisor to be dispensing financial advice. I read the news, give my opinion, share suggestions. I've been saying your last name wrong the whole time. Iserman. Calvin Iserman. My bad. I miscalled saying it Iserman. But I read the news, share my opinion, give suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to go in. There's 4 rules I live by in the crypto space. Rule number 1, education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, always get your return on investment back as fast as possible. Rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make it happen? Stay focused. There's so many things out there that can get you distracted and off course. You can't be a part of everything. Stay focused. Make the money and then flip it. This isn't going to guarantee you success, but it will at least manage your risk. And that, my friends, is the most that you can ask for. Alright, so let's cover a couple of things tonight here. Let's see, first up, insurance giants see big opportunity in cryptocurrency storage coverage. That I'm all for that. The one thing that's the most risky is being able to hold on to your coins and it not get stolen or lost or some kind of way. See, most people right now, they use a bank account and they don't worry about it. They don't have to hide their money underneath their pillow mattress. But in the crypto world, you are in control and responsible for your money. So I would have no problem with it being insured some kind of way. That just means there's a lot of money to be made in this space. Jeremy Keene is living the life. Living the life. Stepped on a sea urchin. Ooh. You got to get her those water shoes. When we went on a cruise to Jamaica and the Caribbean, my wife had bought a bunch of like our water shoes because we went on Dunes Falls and had to walk on the rocks and everything. And me, I'm always the one to step on something. So the water shoes kind of helps. Ooh, I know that has to hurt. Alright, so let's... Insurance. Big insurance companies such as XL Group, AIG, and Chubb are quietly offering cryptocurrency insurance. I'm not even going to go there. Cryptocurrency insurance. They name themselves what? Anyways, offering cryptocurrency insurance as cryptocurrencies and blockchain technology continue to gain acceptance. While the insurance companies active in the sector are not doing a lot to publicize their activities, those interviewed said they can avoid liabilities. Yes, so wait, your daughter stepped on a sea urchin and your wife sliced his toes. It ain't like California beach. Well, California beaches would be worse. Get them water shoes, Jeremy. Water shoes with that rubber sole will prevent all of that, but they'll still be able to feel the ground and everything like they don't have any shoes on at all. Yep. All right. According to Bloomberg, more than a dozen underwriters are providing cryptocurrency coverage, although most insurers, when contacted, chose not to be interviewed. More crypto startups, meanwhile, are viewing insurance coverage as important as they recognize the need for protection from crime, as well as coverage for legal actions against executives and board members. Lucas Nuzzi, Director of Technology at Digital Asset Research, said insurance is a necessity for crypto companies, as such protection can make it easier for companies to work with banks. The premiums are not inexpensive. However, as underwriters in some cases are charging more than 5 times what an average business would pay to protect against loss and theft, crypto startups can pay premiums up to 5% of coverage limits annually. Companies seeking more coverage can require up to 12 underwriters, each of which can offer $5 million to $15 million in coverage, one source noted. Mike Belshi, CEO of BitGo, said the company met with about 75 insurers in May after discontinuing its coverage in 2016 due to the cost. The company became one of the first in the industry to receive insurance in 2015. Christian Weishuber, who represents Alliance, said cryptocurrency storage insurance represents a big opportunity. The insurer has offered individual coverage for cryptocurrency theft for the past year. Weishuber said digital assets are becoming more relevant to the real economy. Insurance brokers Aon and Marsh and McLennan's both said cryptocurrency insurance business has been good this year, despite the fact that the cost is too high for many companies in the space. Aon has streamlined its standard insurance policy to hasten the underwriting process. The brokerage, which claims to account for half of the cryptocurrency insurance market, said some insurers have adjusted their general policies to offer cryptocurrency-specific coverage. Neither brokerage would name their insurer partners. The brokerages also said that they are not familiar with any insurer having to pay any claims for crypto losses, despite all the reports about thefts and hacks. Now, let's see, I'll read this. Policies that vary. AIG said that after meeting with the cryptocurrency trading platforms and custodians, the insurer has included crypto coverage in its standard policy forms, but it did not want to say how much business it has done in this area. XL, for its part, said it has taken a careful approach to assessing risks and has analyzed the coverage on an individual case basis, but did not wish to give more details. Chubb indicated it does not seek to offer coverage for crypto wallets or exchanges, and it did not wish to specify what types of crypto businesses it covers. Well, how are you going to be in business then? How are you going to say, oh yeah, we're going to offer crypto coverage, but we're not going to cover your wallets, we're not going to cover your exchanges, and we're not going to tell you what exactly we're covering? Yeah, that's a good business model right there. I predict they're not going to be in business for very long, because how else are you storing your... There's only 2 ways people are storing their crypto: in wallets or exchanges. So what type of insurance are you offering? All right, Lloyd's of London this month released guidance on crypto coverage and instructed agents to exercise caution regarding cryptocurrencies. That's right, Jeremy. The kids don't want to listen, huh? Daughter stepping on a sea urchin, son slicing his foot. You know what they're telling you? They're telling you to leave Hawaii and come back to California. I say the same thing to my friend Alexis Houston out in Georgia getting bit up by all the Georgia bugs. It's telling you something. Come back to Cali. Alright, back to the thing. Coinbase has coverage for a portion of its cryptocurrency holdings, including coverage for funds stored in hot wallets. The company disclosures do not indicate the amount that is covered for the deposits stored offline for security purposes. Japan leads the way, not surprising. Coverage appears to be more available to companies in Japan. Mitsui Sumitomo Insurance in Japan covers both internal and external risks, including employee theft, mistakes, unauthorized access. The insurer also provides security audits and does background checks for employees. A transaction service provider, Bitflyer, offers coverage for payment transactions in Japan, covering merchants for gateway issues, mishaps, and transaction delays to companies with POS systems. The coverage is offered through Mitsui Sumitomo Insurance. Okay, so it looks like for right now, the insurance companies, they're not looking to insure individuals and their wallets. They're looking more to insure big companies that have a lot of volume going through them, and merchants accounts and stuff. So there's still a little bit of ways before you got some widespread coverage for individuals, but it's happening, and it's happening very, very fast. All right, let's see what else we have here. Worst not yet over for Bitcoin price, BitMEX CEO Arthur Hayes says. I agree with him, at least for the next 40 days or so, because I believe when September rolls around, I think you're going to start to see a major turnaround. The only thing that I cannot predict on that is still what the futures are doing, because they can still mess things up. All right, seems like that anticipated trip to the Lambo dealership will have to be put off for later. According to the co-founder and CEO of Bitcoin Mercantile Exchange, Arthur Hayes, the rally that Bitcoin has experienced this week was accompanied by healthy volumes, making it possible for higher levels to be reached. However, prices could reverse the test and test the $5,000 level again. I don't actually think we've seen the worst. I think this is a very strong rally on good volume, and we definitely could see $8,000, $9,000, and maybe just shy of $10,000. We've been here before, where we rallied from $5,800 to a high of $9,000 level, but didn't quite crack $10,000. I think similar action will happen this time, and I would like to see us. You would? I would like to see us test the $5,000 bottom to really see if we put a bottom in. Okay, I see what he's saying. I don't want to have a real live test on that, but I think it might be true. In his view, Hayes expects that after finding a strong support level, the flagship cryptocurrency could then rally to $50,000 by the end of the year. Are you seeing that? You guys, see, this is why the heavy hitters are not sweating the price of Bitcoin below $6,000, $7,000. They're talking about it still. It can hit 50,000 by the end of the year. It says, given that it's a summer and everyone is in the Hamptons or on the French Riviera or in Asia at Bali, I think people are taking a little bit of a chill time. The same thing happened last summer. Come back in third quarter and fourth quarter is when I think the party is going to start again. I agree. The remarks by Hayes are in contrast to some of the bullish sentiment floating around, indicating that Bitcoin had bottomed out. On Tuesday, for instance, Digital Currency Group's founder Barry Silbert stated that Bitcoin bears had run out of steam. I don't think so. I think it's going to happen again, probably at the beginning of August. We're going to see it come right back down again. If it breaks 8,000, it'll have a good run for maybe a week, and then I think it's going to drop all the way back down to 6,000 again. Stay there for 2 weeks or 3 weeks and get ready for September. FUD not working anymore. Fear, uncertainty, and doubt. According to Silbert, one of the reasons that was giving him confidence was the fact that Jerome Powell, the chairman of the U.S. Federal Reserve, had criticized cryptocurrencies, but this did not place downward pressure on prices. Yeah, because nobody's believing them anymore. People are getting a little bit more educated on this. So they're just not listening to what he has to say. Others who have expressed bullish sentiment include the managing director of Forex strategy at BK Asset Management, Boris Schlossberg, who predicted that the Bitcoin price could break above $8,000 soon. Schlossberg pointed out that at this point, technical analysis was driving the price of Bitcoin rather than the fundamentals. Avenue Capital Group's co-founder, Mark Lazary, also predicted an upward movement for Bitcoin and expects the flagship cryptocurrency to hit the $40,000 mark in the next couple of years. All right, let's go on to the next article. Bitcoin almost everywhere. 5 crypto debit cards worth checking out. Okay. More mass adoption starting to take place. What 5 crypto debit cards? Mass mainstream adoption of cryptocurrencies might take a route few original cadres of developers and enthusiasts imagined. Major payment processing, plastic debit cards. They're incredibly handy for those wishing to use crypto while merchant adoption works itself out. Here are 5 such cards to consider. WireX, BitPay, CryptoPay, Zappo, and Shift. As a disclaimer, I have BitPay. How does BitPay work? Well, basically, you put your Bitcoin into your BitPay wallet. You take your card and you use it just like you would any debit card. Only you're not paying in Bitcoin. By the time the transaction actually takes place, the crypto is being converted from Bitcoin to cash. So the merchant is getting cash, dollars. They're not getting Bitcoin. So BitPay just allows you to do that. So I have friends that are living off of their BitPay card or their Shift card. They don't transfer their Bitcoin into their bank accounts, into US dollars. They just pay everything with their BitPay card. You know, that's one way to do it. Significant strains of the broader crypto community, strident veterans of an ideological bent, chafe at cryptocurrency debit cards. They do in large part because such cards are in bed with sworn enemies, legacy banking, Visa, and MasterCard. Indeed, it is the height of irony. The very institutions crypto was designed to thwart are arguably crypto's most popular onboarding forms. Yep. WireX, a well-known company, WireX has a solid customer base. Along with virtual products, it offers a PIN card. It is also is notorious for fees, and they add up. And while I wasn't going to say your name, Jeremy, but since you put it out there, yeah, Jeremy lives on BitPay. Jairus Coleman is another one who uses it like that. Oh, I don't know if I was supposed to say Jairus' name. And while no company is ever guaranteed to stay solvent, something to consider is shelf life. They tend to come and go. WireX seems well poised for the longer term. Spring of last year received confidence funding in the low millions from SBI Group, a prominent Japanese financial player. It has nearly 1 million customers spread out throughout most countries, with about $1 billion in transaction volume last year. This year, they've added Litecoin, and they basically pioneered countless debit cards in the space. The regular fees are pretty similar to the other cards, hovering around 3% for international transactions, $2.50 for withdrawals. Withdrawals, yes, you can take your BitPay card and pull out money from the ATM. $17 to purchase a physical card. For most everyone else, crypto's slow merchant adoption is a giant pain in the ass. No matter how much one loves crypto and its potential, people need food, clothing, and tchotchkes. I don't know what that is. And no, the fact your brother has a hat store or the fact that random pizza parlor down the street accepts crypto are not immediate solutions. A person can only have so many hats and eat so many of your brother's greasy pizza. BitPay. Another well-regarded provider is BitPay. Captain keeps telling me I need to use my BitPay card more, and I do. I have a BitPay card. I barely ever use it. I need to use it more. Its card is accepted the globe over because it's Visa, though it's only available to U.S. residents. No chip and PIN, so verification is needed. Simple KYC AML identification is mandatory, so all one needs is a government-issued ID, street address, and social security number. The card is available in all U.S. states. It's loaded through a separate wallet client, prepaid. They use Visa, and for around $10 USD, a physical card will be sent along. Outside the U.S., a 3% fee is placed on all currency conversions, along with $3 for any outside the U.S. withdrawals. Withdrawals in the U.S. vary from bank to bank in terms of fees. Using it as a snap, very convenient. Withdrawal limits are generous. Crypto debit cards then are splitting the baby, kissing your sister kind of way to advance money's future while still being able to enjoy life's material pleasures. Done right, Crypto debit schemes go anywhere major payment providers such as Visa and MasterCard are accepted. At the very least, they're a nice hedge. Crypto Pay, like Wirex. They offer virtual and physical cards. It is available around the globe. It can also be a little fee-laden with load fees and maintenance fees, etc. It's, of course, a Bitcoin debit card. Its selling feature is lack of personal verification. They might require more if limits are increased. However, above a couple $1,000s, the card is right around $15. Withdrawals are $2.50, and they charge 3% on international transactions. Scouring the known crypto debit world, those presented are by no means exhaustive. Such cards are designed to help anyone inclined to get started. There are many others as the market sees them popping up all the time. If these don't live up to your standards, there are, again, plenty of others. Zappo is most everywhere and has a solid reputation among enthusiasts. It, too, was an earlier mover in the space. No chip and pin standard, though it's offered. The cost of the card is roughly $20 and it carries an annual fee. Like most other cards, so long as users stay under the $2,500 in withdrawal limits, fees are relatively tame. Shift easily connects to your Coinbase account. Relatively low fees, available only in 45 states around the US. Coinbase is limited to certain countries as well. Shift positions themselves as the first US Bitcoin debit card. The card costs a reasonable $10 to produce and has no ongoing fees. There is, of course, a standard 3% international transaction fee and $2.50 flat ATM withdrawal fee. Here is my only hang-up. Another reason why I have been reluctant to be using BitPay as much is because, even though as popular as it is, the KYC, they know who you are. So if ever the government decides, if they haven't already, I haven't been keeping up on BitPay, that they, just like Coinbase, require BitPay to report all crypto transactions or anybody that has a BitPay account every time they use the card. If all of that's being sent to the IRS, then, you know, they basically know how much crypto you have. And so if you're looking to kind of stay off the grid on that aspect, then just be mindful that when you give all of your data and info, KYC, know your customer information, then that can possibly be given to the government so that if that company wants to follow United States laws, rules, and regulations. And if that happens, and you are not reporting your taxes, your earnings to the IRS, and they start matching stuff up and say, well, wait a second, you reported that you only made $1,000 of Bitcoin last year, but you used $60,000 worth on your BitPay card last year. Something's not adding up. So just be mindful of that. And as always, pay your taxes. I'm being publicly recorded, so I'm saying it. All right, and the last article. Why the old guard hates Bitcoin. I mean, it's kind of obvious, but let's see what this article has to say about it. Why does the old guard hate Bitcoin? Editors know, legendary investor Warren Buffett recently called Bitcoin rat poison squared. Cryptocurrency expert Tika Tiwari acknowledges Buffett is the undisputed master of value investing. But as today's guest editor, Tika shows why the Oracle of Omaha is out of his league with cryptos. And before I start, I want to say this about Warren Buffett. I do not believe that Warren Buffett is clueless about Bitcoin. The fact that he speaks on it so much lets me know that there's an agenda going on here. Warren Buffett is not going to spend his time on something he don't care about. There's an agenda going on here. Similar to Jamie Dimon. You know, when Jamie Dimon said that people are going to die because of Bitcoin and he's going to fire anybody in his company trading it, and then 2 days later goes out and buys the most Bitcoin assets in the world and was actually found guilty of market manipulation and fraud. I don't think Buffett is on that level, but I also don't think he's going to miss out. He has an agenda. So he's not clueless. I think he probably understands this and knows more of it than we do. So now let me read this article. Bitcoin is antisocial, stupid, and immoral. That's how investing legend Charlie Munger described the most popular cryptocurrency in the world. Munger is the right-hand man of Warren Buffett and vice chairman of Buffett's Berkshire Hathaway company. He's a billionaire. Yahoo Finance interviewed Munger during the company's annual meeting in May. That's when he called Bitcoin a combination of dementia and immorality. And you got to think, the adjectives that they're using, why are they going so far? It's like a lover scorned or something. You know that it's a thin line between love and hate? Why not just say, you know, I don't believe in it. I don't think it's going to go anywhere, and call it a day. No. They got to call it rat poison squared, antisocial, stupid, immoral. You must have dementia. It's immoral. Really? Note to Charlie, Bitcoin is probably the most moral currency out there. Unlike the US dollar and other fiat currencies, central bankers can't print Bitcoin into oblivion, so its value doesn't erode through inflation. Do you think Charlie Munger is ignorant of that fact? Or is it because he knows that fact why he's saying what he's saying? It is a threat to the old guard. I mean, I can answer that question in one sentence. Why does the old guard hate Bitcoin? Because Bitcoin is a threat to the status quo. So let's continue. But Munger didn't stop there. Suppose you can make a lot of money trading freshly harvested baby brains. Really? He continued, would you do it? To me, Bitcoin is almost as bad. Think about this. This is like an 85-year-old billionaire. It might be in his 90s. And he equated Bitcoin, trading Bitcoin, to trading freshly harvested baby brains. What are you, 12? Not to be outdone, Buffett then likened Bitcoin to rat poison squared. I'm not exactly sure how Bitcoin and baby brains are related, but I do think good old Charlie is out of his league here. Look, Munger and Buffett have imparted tons of investing wisdom over the decades. I've studied both legends in depth, especially when it comes to their specialty, value investing. And do you know where they got that from? Do you know who they're students of? This is why I will shout it till I am blue in the face. Education is so important. And knowing your history. Have you heard of a person named J.P. Morgan? There's about 4 or 5 banks named after him that were broken up because of deregulation at the turn of the last century. J.P. Morgan, recorded as one of the world's richest men ever. At his height in today's money, we're talking about close to $350 billion. The richest man in the world right now, and I'm not talking about Vladimir Putin, is Steve Bezos at $150 billion. So J.P. Morgan, can you imagine having $350 billion back in like 1898 or so? So, why do I bring him up? He is the financier behind Thomas Edison. You know who Thomas Edison is? The so-called inventor of the light bulb. I wouldn't call him the inventor of the light bulb. I would say he's the first to be able to mass produce it, because he had the financial backing of J.P. Morgan. He had the first house that had electricity in all of Manhattan in the United States. J.P. Morgan's house was the very first house turned on with electricity. His father was there at the party when the sun went down And to impress his dinner guests, instead of lighting the kerosene lamps, he flipped the switch and turned on the electricity. And everybody gasped, except his father, J.P. Morgan's dad. And you know what his dad said? His dad told him, "You need to get rid of this stuff right now. Stop funding Thomas Edison. Stop putting our name behind this speculative, crazy idea and invention." Now, hindsight is everything. Would you not say that electricity has changed the world? Yeah. The world does not turn without electricity right now. We take away electricity, we go back to the dark ages. Citizens around the world today, most, have no idea how to live and survive without electricity. We are talking about the deaths of billions of humans if there's no electricity. I am not exaggerating. So you would think J.P. Morgan's dad would be like, "Son, if you're the first to bring this groundbreaking technology that's going to change the world, we're rich," even though they were already rich. No. His father said, "Absolutely not. We only invest in sure things and things that we know has value, not speculation." Electricity at that time was speculation. Warren Buffett is of that same school of thought. He's one of the world's richest men, but you don't see him investing in every single Fortune 500 company. He's one of those guys that invests in just a small amount of things, but for a long amount of time. He's a holder, in other words. That doesn't mean the things that he doesn't invest on are bad. That's just not his play. So Buffett is kind of the same way, and Munger is the same way. Only difference this time, though, is that this whole Bitcoin and crypto stuff is a threat to their empire, their status quo. And they're too old to figure out, yeah, let's go ahead and jump on this bandwagon and keep things going. You want to know what old guard family will? It's a family that has been the richest family in the world, not for decades, but for centuries. The Rothschild. You better believe they will be all over crypto if they not already are right now, because they control most of the banks. So in one hand, they're going to be screaming bloody murder that crypto is the devil. On another hand, they're already positioned to take advantage of the new wealth that's going to be generated because of crypto, which means they will still be on top even if the banking industry as we know it collapses. The Rothschilds will still be there, large and in charge. And all the sheep that followed them saying, "Oh, they said that it was rat poison squared. I'm not investing in that because Warren Buffett said it's stupid." All of y'all are going to still remain broke. All right, I went way off tangent there to prove a point here. Value investing, that's what that means. Okay, let's go back to the topic here. He says, "But I think they're absolutely off the mark when it comes to the new cryptocurrency asset class, the new world order. It's been 22 years since I've seen a bull market like the one we're in now with cryptocurrencies. I can't overstate how profound this is. I won't blame you if you think Bitcoin is just a fad or akin to rat poison squared. Why would you put your trust in a digital construct like Bitcoin? On the surface, it seems like madness. It flies in the face of sensible wealth building, the kind that legends like Buffett and Munger advocate. But consider this. Bitcoin is now 9 years old. That's 3 years older than the internet bubble. It's outlived the real estate bubble and the financial crisis, and it's now worth about $128 billion. In recent times, it's outpaced the run-up in stocks, bonds, gold, and silver. Has the whole world gone mad? Is Bitcoin just a hyper bubble? I understand if you have reservations about cryptocurrencies like Bitcoin. In a normal world, I tell you that Bitcoin is a dumb idea. In a normal world, Bitcoin would be nothing more than a geek-centric curiosity. But we do not live in a normal world anymore. And that's why I'm writing to you. I want to show you why cryptocurrencies belong in everyone's wealth building plan. We can thank the relentless power grab by the world's governments and central banks for making Bitcoin and other cryptocurrencies a viable financial product. Let me explain. As governments impose their will on the population, people will use digital currencies like Bitcoin to win back their freedom of choice. That's true. That's something that the academics can't seem to figure out. They're always looking at the numbers, but they're missing one key ingredient: human nature. Whether it's the loss of financial privacy, the devaluation of paper money, capital controls in China and elsewhere, or government-sponsored payment bans, digital currencies like Bitcoin are stepping in to bridge the gap between what the people want and what governments will let them have. Cryptocurrencies like Bitcoin meet two needs that no other conventional asset can: freedom and virtual anonymity. As governments seek more and more control, they're actually creating a bigger and bigger market for Bitcoin and other digital currencies. As we see governments trample citizens' rights even further, it will be cryptocurrencies that step in to give us our freedom back. And naturally, this makes a certain type of person nervous. Buffett and Munger aren't the first smart guys to underestimate Bitcoin. In 2013, famed economist Paul Krugman penned an article titled, "Bitcoin is Evil." Evil. And he still stands by that position. In 2016, he said that Bitcoin was in a bubble when it was at just $350. Since then, Bitcoin has blown up over 2,000%. That shows you how smart Krugman is. In 2014, Seth Klarman, another one of our favorite value investors, said that Bitcoin is yet another bandwagon we are happy to let us pass by. Since then, Bitcoin has risen as much as 50 times higher. If your money manager said that he was okay with leaving a 50 bagger on the table, how long would you keep him around? In 2017, JP Morgan Chase CEO Jamie Dimon said that he'd fire any of his employees who traded Bitcoin for being stupid. He also called Bitcoin a fraud. Dimon later said that he regretted calling Bitcoin a fraud. Notice any similarities? Not only were these guys wrong, they missed out on the greatest investment opportunity of the 21st century. At writing, Bitcoin is up 9,642,757% since 2010. That's right. If you invested $100 in Bitcoin 8 years ago, it will be worth about $9.6 million today. Green X. I'm just saying. Now, these guys are successful and they've made billions, but cryptos aren't their area of expertise. If Charlie Munger told me about a great value idea, I'd back up the truck and buy. But I wouldn't listen to his advice on Bitcoin. But that's not the biggest reason why I choose to ignore them. You're right, Kathy. It's like if Jamie Dimon came out and said, "No, I want to make a retraction on what I said. I said that, Bitcoin was a fraud. What I meant to say was Bitcoin wasn't a fraud." Do you get that? That apostrophe, that NT, wasn't a fraud is what I actually meant to say. That's basically what he did. And the hypocrisy here. Do you know how much JP Morgan has paid to settle allegations of fraud during Jamie Dimon's tenure? It's in the billions. And there's more. We've come to discover that while Dimon was calling Bitcoin a fraud and knocking the price lower, his traders in London were actually buying Bitcoin. Recently, Munger called Bitcoin a noxious poison, while at the same time saying that Wells Fargo, Berkshire's second largest position, should be given a break by regulators. Think about that. Wells Fargo has been fined billions of dollars for falsifying millions of customer accounts, mortgage records, and auto insurance records, all to pump up fees, and Munger says that they should be given a break. I can barely breathe through the hypocrisy. I'm going to calm myself down because it's when I start reading things like this, it starts getting me all fired up. I'm not going to get fired up today. I'm kind of chill. So let me relax and just read. In a blockchain world, Wells Fargo could never commit the fraud it's been found guilty of. That's because records are tamper-proof when they're secured by a blockchain. In other words, there's no cooking the books. No wonder the bankers and the old guard are so scared. In a blockchain-enabled world, we don't need their institutions. I'll leave you with this thought. If you are a lover of personal freedom, then you owe it to yourself to get educated on how digital currencies can liberate you from the limitations, onerous fees, and stifling regulations of our current financial system. Hold up, did I just hear that just right? Let me go back and see if you caught this. If you are a lover of personal freedom, then you owe it to yourself to get what? Educated on how digital currencies can liberate you from these limitations. Education is the key. Education is number one. Now I'm going to save this article because I'm going to send it to my father. My dad is of the old guard. And anytime there's a negative article, anything that comes out about crypto, he's the first to send it over to me. One concern that, am I about to lose a lot of money? But I'm going to leave you with my own quotes here. So after listening to billionaires like Warren Buffett and Charlie Munger and Jamie Dimon, who are you going to listen to, them or these quotes? Because someone said, Brandon, why do you keep reading these quotes? These quotes make me feel happy. All right. So here we go. Blockchain technology could change our world more than people imagine. Who said that? China's richest man, Jack Ma, who, by the way, is against Bitcoin, but likes blockchain technology. Blockchain massively lowers the barriers to creating tradable digital assets. It allows individuals who don't know each other or even trust one another to make irreversible transactions in a whole variety of fields in a safe and secure way. Who said that? Stanford University. Blockchain solutions will boost transparency and governance, reducing fraud and helping to build a better public goods infrastructure for improved organization and distribution of goods and public services. Who said that? A country that banned Bitcoin, the Indian government. Look at this one. This is one of my favorites. Virtual currencies will become part of the economic practices of any country, anywhere. Let me repeat that. These currencies are not going away, and they will proliferate to every economy and every part of the planet. Some places, small economies, may become so dependent on virtual assets for survival. And these currencies will be outside traditional monetary intermediaries like government, banks, investors, ministries, or international organizations. We are witnessing. Do you want to witness this, or do you want to be a part of it? But we are witnessing a technological revolution. Perhaps we are witnessing a modern miracle. You know who said that? CFTC Chairman Rostin Benham. And then my last quote, because all of these is the reason why the old guard does not like Bitcoin. The last quote. Moreover, what we view as money has changed over time. Cowrie shells once were such a medium, but no longer are. Our currency originally included gold coins and bullion, but after 1934, gold could not be used as a medium of exchange. Perhaps one day employees will be paid in Bitcoin or some other type of cryptocurrency. Do you know who said that? Supreme Court Justice Stephen Breyer. You can't get any higher than that. Unless the president decides to say something, which isn't going to happen. Putin is. I'm surprised he's not following Putin's lead on this one. Putin's talking about it every day. So with that, ladies and gentlemen, who are you going to listen to? And that is it for Late Night Crypto Talk. I hope you learned something new. As always, this is the point. But I'm not going to just leave you with that. I want to leave you with a plan of action. Because you don't want to be just a witness. None of this matters if you don't take advantage and benefit from this. Ride the wave. So how can you take advantage? There's two things you can do right now that will put you in what I personally believe, because I'm not a licensed financial advisor, so I can't give you financial advice, but here's two things that you can personally do that will set you up so far good that you will thank me a year from now. The first thing you can do is take $300 and create yourself a Cryptogenics account and start getting your education on. That is the most valuable thing you can do, because the education that you're going to learn, you cannot unlearn. Nobody can take it away from you. It is priceless, and it's only $300. The second thing you can do as far as making an investment is not go out and buy crypto coins and hold on to them. That's the lazy man's way of doing it. Now you're just sitting back waiting for a result, waiting for the price to go up. To really get involved and active, buy yourself a mining machine. Mining is the backbone of the crypto industry. Nothing happens without miners. Would you rather buy the golden goose, the golden egg, or the golden goose that produces golden eggs? We are offering the Green X mining rigs because we're mining Green X coins. The next major industry to be disrupted is power. Power. Electricity. We saw how electricity changed the world. Well, it's about to change again because the grid hasn't changed in over 100 years and is about to get revolutionized again now. And that mining machine will be able to generate you enough cash flow that you can use to invest in more opportunities, in more things, in more creating your crypto portfolio. But you need to have a cash flow coming in. You're right, Kathy. Next is health. And it doesn't stop there, because then you're going to see the travel industry. So, those are two things you can do right now to set yourselves up for the rest of this year and 2019. The cost of the mining machine? $3,750. What? I can't afford that. You can't afford not to. One of my biggest fears is 10 years from now, when the entire world has changed because of blockchain technology. My 10-year-old son is 20, and he says, "Hey, Dad, I remember you always talking about this Bitcoin crypto stuff. Why are we still broke? You were talking about it when it was worth $2,000 a coin. You first bought it when it was $700 a coin. It's now like almost $1 million a coin. Why are we still broke? There's no way I'll be able to sleep at night knowing that I could have taken advantage back in the day. But $3,000 was too much money. Not gonna happen. So with that, you guys have the fantastic evening. I will be back tomorrow morning for early morning crypto talk based on what the news. Hope you learned something new. As always, that is the point. God bless. Good night. Bye-bye.
Crypto Gen X.